Welcome back. You're watching Taking Stock, and this has been an interesting week that we're taking stock of. Siddharth Bhamre now joins in from Angel Broking. Siddharth, hi. You know, we had an interesting series. It was phenomenal in the first half, and second half was all about consolidation. And even the June series started on a cautious note. What's your outlook for the series now?
Hi Anuj, we have been talking on the expiry day that how first half of June series would pan out, and our take was that you need to be an active trader and should not just love cyclicals but also some of the defensive names we were talking about. And very first day of June series, defensives have taken over. But will this last for long, where defensives would continue to do continuously well and cyclical would correct? Answer to that is no. We would again reiterate the fact that you have to be an active trader, shuffle from cyclicals to defensive, defense to cyclical, at least in first half of June series, because we are expecting some kind of consolidation. In this entire scheme of things, we are expecting a narrow movement in Nifty. We are not expecting it to go substantially below 7150, 7200, which is strong support. And at the same time, 7400 to 7450 would be strong resistance for the index. What we have observed in option segment, Anuj especially, is that put call ratio started with very low levels of 0.68 for June series, which clearly suggests that again people are piling up on long call positions. And why we are saying long calls? Because calls IVs are higher than put IVs, which is generally not the case. So taking this fact into consideration, we believe this first half would be boring from index perspective, but quite interesting stock specific.
All right, Siddharth, hi. Thanks for joining us. So let's start off with some of your stock-specific strategies that you have. The banking space actually had the biggest cuts last week. You would buy into ICICI Bank on this dip?
Yes, I would do that, Sonia. If you look at first at Bank Nifty has just closed below its strong support of 14,900. But the next support is around 14,500, which is not very far, and for an index of 15,000 levels, 300 point move is not a big move. It's around 2% or less than that. ICICI Bank has been consolidating in a narrow range again. It has shown last 2 days some correction, but cash volumes are not there. At the same time, we have not seen any major shorting in ICICI Bank. It is more of unwinding, which clearly suggests that it's a buy on dip stock. It has a strong support in a range of 1400 to 1420. So at current levels or at slight dip, we would suggest to go long in the counter with a target of 1490 and stop loss of 1385.
All right, that's interesting. The sector that did really well for last couple of days, Siddharth, on Friday especially, was pharma, and you have picked Cipla from there.
Yeah, Cipla has been, underperformer. It has been correcting since quite some time. And Friday's session has seen a huge spurt in activity. We have been actively accumulating Cipla between 375, 380 levels. We have aggressive targets also here, Anuj, in mind. I believe that current buying momentum, which began on Friday, would, continue for 2-3 more trading sessions. So even if you have missed out on Friday's rally, I believe Cipla has further upside from current levels. So go along with a target as of now of 406 and a stop of 374.
Okay, and from the technology space, it's interesting that this week some of the biggest gainers have come from the technology space, and topping that list was Tech Mahindra with a, I think, 8% gain. You see more on the upside next week?
Yes, Sonia, we did recommend on Tuesday also to buy Tech Mahindra, and looking at the way it has now shown clear-cut breakout about this 1900 to 1910 was strong resistance, and the stock has managed to close above that with formation of long positions. So we are expecting further heightened activity of formation of long. We have target of 2030 in mind. You can fix a stop of 1885 and go long in it.
Okay, Siddharth, finally, oil and gas space, that's one space which corrected the most this week among the larger ones. Any strategy over there in terms of individual stocks?
We are aggressively shorting Hindustan Petroleum in a range of 1415 to 1420, and we continue to hold on to those short positions. We are expecting further downside in stocks like HPCL and IOC. So that is where we are negative. We don't have as of now trades in Reliance and ONGC, but one stock which has been underperformer, very muted, is Cairn India. It is drifting down to its strong support of around 335, Anuj, and it has increased open interest significantly. Ideally, you will see that 3-4% price correction and rise in open interest would suggest that this is short formation, but I believe it is blend of long and short. It is quite possible that this stock from 335 or plus minus 1-2% here and there would show you a strong bounce back. So we would suggest to initiate contra longs in Cairn India around 335.
All right, Siddharth, thank you for those all of those strategies, and we'll see how the next week shapes up. Of course, we'll be seeing you next week as well, but you enjoy your weekend up until then. Well, that's the word coming in from the technical and the fundamental analysts, but let's get you some more market opinion from influential voices. CNBC TV 18's Lata Venkatesh caught up with Uday Kotak earlier this week and began by asking him whether he thought that the market had gotten ahead of itself. Take a look.
A lot of people were playing the event. So the event is out of the way.
Yes.
Therefore, you're seeing some resistance to the market levels because a lot of players who played the event are now saying, I've got my pop. We are now going to see more long-term investors taking a medium-term call on the Indian economy. And those are the people who are then looking at present valuing the trajectory of growth.
Okay.
And then you break it sector-wise. And therefore, for a while, at least for the next 12 months, the market valuations will be ahead of the earnings.
Okay.
And investors are prepared for that as long as they see trajectory growth picking up over time.
So, by the time we end 2014 or FY15, you wouldn't be surprised with a 17 times market.
No, I think you again have to really divide the market into potential growth rates of the different sectors.
Okay.
So whether it is 15, 16, 17 for the market as a whole, there's a commodity cycle, there is franchise, there is consumer goods, there is IT, there's a level of exchange rate which will determine some of these sectors as well. But broadly speaking, at this stage, do go for discounting of the 5-year trajectory rather than only looking at PE on the immediate future.
Okay, so what would you want or expect by way of legislative help? Corporate bond markets or anything like that?
I think debt capital markets are also seeing green shoots of activity. We are seeing a lot more debt issuance being looked at. We are seeing a number of companies looking at the IPO market again.
Oh.
So I think happy days are here again.
Okay. Well, going beyond markets itself, are you getting a sense that, companies will be able to repair their balance sheets? There has to be a lot of risk appetite for some of these infrastructure companies to be able to tap capital. Is that,
I think
GMR had to actually pull back its...
Selectively, I think where fundamentally the underlying company is viable, the markets will provide the capital. But it will not happen across the board. Therefore, selectively, yes. Broad brush, no.
Okay. Well, let me come to the rupee market as well before we run out of time. What do you expect will be the rupee's trajectory? Is 58 about as cheap
I
the
think
dollar
a lot
gets?
depends on the largest player in the rupee market, which is the RBI.
Yeah, but how do you outguess him?
My personal view is that it's a very important choice of policy which the government and the RBI have to make. Do we want a strong rupee or strong manufacturing? If we want strong manufacturing, we must make sure that the rupee does not make India uncompetitive.
Okay.
And from that point of view, we should avoid an excessively strong rupee.
Well, that was Uday Kotak with his views on the markets and the economy. That's all the time we've got on this edition of Taking Stock. We'll see you guys again on Monday morning. Goodbye.